This week is a big week in terms of economic data. I want to bring in our next guest. We have Scott Bauer. He's the CEO of Prosper Trading Academy to help us take a look at some of the economic data that's headed our way. Scott, welcome. Thanks for joining us on a Monday. We do have the jobs data on Thursday of this week, but it's not the only number to keep an eye on, but I'd imagine probably the most important and, well, I guess you would say the most closely watched number for traders and investors alike.
Yeah, no doubt, Ben. It's a jam-packed week and condensed because of the holiday and Friday, but there's a lot ahead of that. Pending home sales today, that's number one. We're getting a lot of data, not just in the U.S., but globally as well. We're going to see UK GDP. We're going to get that out of the Eurozone. Then, the Fed speaks tomorrow, and they'll have their announcement on Wednesday. And then Wednesday here also, we get our ISM manufacturing numbers. Then, of course, on Thursday, a day early, like you had mentioned, we're going to get the big jobs numbers. So it is really a very, very packed week.
Yeah, I was just talking with Stephanie. Inventories are going to be a focal point in terms of energy traders as well. We've got, again, a lot going on. Certainly here we can see the data with 1 day less to jam it all in. Scott, you mentioned numbers globally. One of the things that we talk about here a lot on the show and with you is the trends that we've been seeing. And one of those trends, for the most part, has been not only better than expected in many cases, but certainly better than prior levels. Now, obviously, the bar has been set kind of low in terms of comparing current levels with last month to the last couple months levels. But how closely are you watching some of that global data? Because everybody's kind of has the mindset that, well, you can look at Asia, you can look at Europe, and that's where kind of the virus started to spread ultimately here in the U.S. Are you expecting to see that sort of recovery effort kind of come into play in the same way that the pandemic sort of spread? Or should we see it first in Asia, then ultimately in Europe, and then expectations for it to kind of spread here in the U.S. as well in a positive way this time?
Right, and that would make perfect sense to see that kind of leading what we're doing here, since it was there first. But I think that news is really going to be put to the wayside a little bit, and people are really going to focus on to me, a couple things this week. Fed speak on Wednesday, right? Which probably is not going to change much at all. I mean, I don't think their rhetoric is going to change much from what they've, continued to say over the last few weeks and months here. And, ISM manufacturing is going to be a big one. Are we going to see an uptick here at all? It's actually the expectations, Ben, are almost back into expansion area. I think the expectations are back around 49, and that 50 is the divider there. So that could be a big one. And then, of course, Thursday. So I think everything we see leading up to that is important, yet the market, in my opinion, will probably discount everything until we get to Wednesday, Thursday.
Scott, I wanted to get your thoughts on, well, as you said that, actually, one thing that came to mind is I wonder how reliable what we're seeing here in the U.S. is going to be comparatively to some of the other numbers, Asia and Europe. It seems like they've been able to kind of control some of the spread here, while here in the U.S., I think we're something like 4% of the global population, yet we have 25% of the global cases. Let's move on, though, because I'm curious what you think this means in terms of rates, which for the most part have been very much range-bound. You mentioned no major surprises expected in terms of the Fed speakers this week as well. Talk to us about what you're looking at in terms of the TNX, in terms of the TYX. They have a very well-defined upper and lower extreme in terms of the March highs and lows that I've been keeping an eye on. How about you?
No doubt about it. That range bound is, I kind of compare it to where we were in the oil space 6, 9, 12 months ago, that we had that very, very defined range. And especially with the Fed coming out on Wednesday and not really expecting to do much of anything here, that range is probably going to even tighten up a little bit. If anything, I could see rates maybe even ticking down a little bit here, because I can't imagine the Fed saying anything that's going to be inflationary or lead to any sort of prospecting of higher interest rates.
Scott, everybody's poo-pooing on the dollar right now and kind of downplaying its ability to recover. Should we see some weakness in the indices, or either way, for the most part, with all the stimulus measures we've been seeing, with Europe really kind of rallying back and exhibiting some strength in terms of some of the manufacturing data that we've seen, and across the board sort of on their recovery efforts. What are you seeing? Because ultimately you mentioned some potential downticks in terms of rates to come, but there hasn't really been a very close tie as far as rates in the dollar recently. What are you expecting?
No, we have not seen that working together like we normally see, but don't count the dollar out yet. I know it's been weak and people are saying, oh, it's overdue, it's time, it's this, that, and the other. But that 96 and a half level or so, I wouldn't count that out. But that is some significant support in the dollar here. So, I actually think that there's probably less downside than there is to the upside here. I wouldn't be surprised if we do see a dollar rally going into the third quarter.
How about gold? Speaking of rally, headed into the third quarter, it's been
up and away.
Yeah, definitely. What are you looking for this week, Scott? Continuation and potentially that 1800 level?
I do think we see continuation, if for nothing else than the psychological risk-off trade. And as the news continues to be, let's say, not so great about the reopening and maybe even shutting down a little bit, that's one of the first trades that retail investors or the mindset of traders goes to, is a risk-off trade like that. And there's certainly a lot of tailwinds here for gold here, and that 1800 is, it's right here, Ben, and I don't see how we're not reaching there and probably breaking through.
Multiple tailwinds, Scott. Really appreciate you joining us here. We could list a long list of them, and we'll continue to have you back to help us do so in the near future.
Thank
Scott, really appreciate you starting the week with us here on the TD Ameritrade Network. Ladies and gentlemen, check out Scott Bauer. He's the CEO of Prosper Trading Academy, and